Hello everyone, I'm Marty and welcome to my March 2025 Real Estate Market Update. I will not digress into the whole tariff discussion. You're all hearing enough of that. I'm going to focus strictly on real estate today, which I'm sure you'll appreciate. But I will point out that Pospisil Realty Group, I'm proud to say, is 100% Canadian owned and operated along with our other fellow businesses here in Canada. So, jumping right into the stats, let's see what's happening now. We're now into March. I've just accumulated all of the February stats. Everybody's asking, where's the market going? What's happening? There's a lot going on in the world. And I want to give you an idea on where we're at now and give you some confidence in our market because it is moving along as a relatively stable spring market. It is well underway, and here's the numbers to sort of show that in the various categories. In terms of sales activity, yes, we're selling less units. There are less sales taking place today than over the past period, the same period last year. With respect to houses were down, townhomes and half duplexes were down, and of course apartment condos. That activity year over year is down, but in terms of the benchmark prices year over year, we're actually up in detached houses by almost 2%, slightly down in townhomes and half duplexes, and slightly down on condo apartments. Over the last month, relatively no change in pricing. We are coasting through that spring market. We are seeing good activity on properties that are accurately priced to reflect the current market conditions. We're actually seeing multiple offers on many of the sales that we're doing. We had a couple of them over the last 2 weeks. So that's a good sign because there's a lot of people who are buying. A lot of people have approvals and they're watching those rates drop. So that activity is rolling along. So don't let what's happening scare you off to move on with your plans is my advice, because many people are moving forward on everything else with respect to real estate. So let's look at specific product in specific areas, what's hot and what's not. And as a regular subscriber, you know the metric I use to track the activity in the various product and areas is called the sales ratio. And all the sales ratio is that absorption rate of certain product types and areas into the market, i.e., what's selling every month? What percentage is selling every month for that type of product? So if less than 11% is selling, we're in a buyer's market. There's downward pressure on pricing. The buyers are more or less in control of the market, and that's relatively low activity. If we're between 12 and 20%, we're in a balanced market. It's not favoring the buyers or the sellers. But if we're over 21%, we're in what we call a seller's market that has upward pressure on pricing, multiple offers everywhere, and the market's heating up. Okay, so those are the three markets that I look at. And if we look at each category, the first I'll look at is detached houses, Vancouver West Side. Now, as you saw since December and January, we were about 10%. February, we were pretty slow at 6% sales ratio. Let's bring in the stats for this past month. And we are still at 6%. No change there on detached houses. That West Side, that's still in a buyer's market. Okay, if we look at condos, townhomes on the west side, you can see December was strong at 17%, January very strong at 20%, and February you can see that activity drop down to 13%. Let's bring those stats up. We are actually, for condos, townhomes, west side, we're at 16%. So we're well into a balanced market for attached product on the west side, moving along quite well. And if we go into the downtown area for condos and townhomes, you see we're hovering around 13, 11%. For this past month, we're at 11% again, still in that buyer's market territory. Now, popping over to the east side for detached houses, we were in December 13, January 13, February. Again, that activity dropped down to 7%. Let's see where we're at now for detached houses. East side, we're actually at 11%. So you can see that activity has come up right to that upper plateau of a buyer's market, probably going to pass into a balanced market in the next month's stats. Typically, March, we do get increased activity. If we look at condos and townhomes, Vancouver East Side, this is a little surprising. You can see we were superheated at the end of the year, and in February dropping down to 19%. We're actually at 21% right now, which puts us into that seller's market territory. So very busy on the east side for attached product. Overall in BC, you can see we're hovering at that upper end of a balanced market throughout our province. So what's happening in prices? Okay, average prices have not changed much. If you average them out for houses, townhomes, and condos, we're pretty close to that peak pricing. It is hovering around there, up and down a few percent as we travel through 2025. If you look at the 5-year trend, you can see we hit that peak pricing back in the end of spring last year, and we're slightly below that from a 5-year average point of view. So prices are still holding high. They're still stable. We're not getting any major price changes. And if we're looking at the burbs outside of Vancouver proper, going into our neighborhoods, and I look at the sales ratios for various outlying suburbs, you can see when it's green, you can see the activity actually increased last month. So we're seeing a lot more green than we are red. Further out, for detached monthly variances throughout the Lower Mainland, that activity increased for detached homes, interestingly enough. And for attached, the monthly variances, about a little more green than red. We saw a little bit increase in activity throughout. Interesting middle band we've got here in the Lower Mainland for the monthly variances of the sales ratio for increased activity throughout the Lower Mainland. So that's interesting to see. Now, if we're going to forecast for what's going to happen the rest of this year, and we're really kind of going month to month here to see what's happening, we've got a few market drivers, and we actually have a few recent market drivers and deterrents that have been introduced, but generally we follow 4 areas: consumer confidence and buyer demand. That is, the rates are continuing to fall, and the pent-up demand is releasing, so the buyers are out there, but there is some concern about what's happening with respect to this tariff war that's now well underway. Inflation is great. It's behaving here. There's been very little change there. I'll show you the actual stats in the next coming slides. The cost of borrowing is dropping. We'll talk about that. We'll talk about what Tiff Macklin's going to do on March 12th. But that is improving. We're in transition here, hopefully to green. We'll see what happens there in the next month. And the inventory levels are building slowly, and that's pretty normal for a spring market. We see more and more listings come online, but not building as fast as we'd normally see in a spring market. So we've got some people holding back from listing. We have others listing. So it's actually a good thing we're seeing a slow increase in inventory, because you don't want that supply to jump up if the demand is not catching up with it or passing it, because then we get some price changes. So it's a gradual increase in inventory. So generally, pretty good. If we look at the details in consumer confidence, what's the buyer thinking? What's going through their head right now, and the sellers? As I mentioned in my last update, the good news on the capital gains delay, that has now been delayed to January 1st of 2026. So now you are back to the old capital gains rules of 50% instead of going to the 2/3. Remember, we do have an election coming up in October. It's going to be a very important part of the election decision for many people holding investment properties. So you want to get out there, put your vote in. Unemployment, not changing too much. Canada, 6.6%. BC, 6%. Not a big change. Retail sales have been taking off throughout the end of last year and into 2025. The monthly GDP, okay, we're going to see some changes there with this whole fiasco going on with the tariff war. But right now, we've seen a steady increase in the GDP up until perhaps these last few months. And the data does trail by a couple months, so we may not see any immediate changes there. New construction and completions. Under construction, we got a lot going on last year. A lot of properties were sold for reconstruction. I'm seeing a lot of new homes going up in my neighborhood, so that's always a good sign. And if we look at the actual sales for the province in general, if we're looking at BC, you can see those sales since the beginning of 2024 have been increasing. So typically, apart from that drop that we saw from last year, a minor drop, as I mentioned in my first table, we are seeing a bit of an adjustment. But overall, we're seeing those sales come back from that period over COVID, and then of course the hyperinflation. Now, year-to-date housing starts, that's also a good indicator of what's happening. If we look at Vancouver, 2024 in orange and 2025 in blue, there is a lot of housing starts, a lot of developers, builders, buying land and redeveloping now. So they're looking a year and a half to 2 years to 3 years down the road for when that product is actually on the market. And that's some optimism there going into this mid-spring market for 2025. So there's a lot of positive activity happening. And as I mentioned, inflation now is at 1.9%. It was at 1.83%. That's good news. Tiff Macklem's generally quite happy, but he's also taking other factors into account now. So the overnight target rate is 3%, and that's good because every time we get a drop in the overnight rate, that will directly and immediately impact the variable rate mortgage holders. And the 5-year, of course, as I went into great detail in the last update, is tied into the bond yield. So as the bond yields drop, when that economy weakens, you're going to see fixed rates drop. And I'll talk more about that again today. So the borrowers are getting excited. There is that window of opportunity. We've gone now from 5% down to 3%, 200 basis point drops on that overnight lending rate. So that's all good news from an inflationary point of view. And our next announcement and meeting for the Bank of Canada is going to be March 12th. There's a lot of talk about that being 50 basis points. So that would bring that overnight rate down to 2.5, which would be an incredible advantage for people taking advantage of those mortgage rates. Okay. So this is just showing inflation. I've got the Bank of Canada happiness band here between 2 and 3%. We're below that at 1.9%. We've got some room to breathe. If things do change or heat up a little bit, we've got a whole percent of inflation that we can play with to still stay within that happiness band. Probably one of the reasons the economists are forecasting that 50-point drop coming on March 12th. Okay, so in sync with our neighbors, if we're comparing to the Fed next door, our inflation's at 1.9. They're at 3. They might see some changes more quickly than we are going to see some changes. I've noticed the price of eggs in the U.S. have jumped up. It's been a bit of a political hot potato for them. It was 2.9% last month. They're seeing a slight increase, and their overnight rate is at 4.33, whereas, as you recall, we're at 3. So we're pretty well in sync. We might see this take off a little bit in the coming months, so that will be an interesting factor to watch, is that inflation. So the cost of borrowing, as I mentioned, we've got, these are the things that I covered in great detail in my last update. If the UF tariff war does continue, our economy is going to be impacted, there's no doubt, and that will eventually cause inflation. But a weakening economy also will bring those bond yields down, and dropped bond yields will also drop the fixed mortgage rate. So the silver lining, I guess you can call it, is those fixed rates are probably going to drop more throughout this year. That's good news. But if inflation starts to take off, the Bank of Canada may not have any choice but to bring those rates back up to counteract inflation. So timing's important. If you do it right, you might be able to take advantage of that window and lock in your variable rate to a fixed rate when they do drop down. So, and also another thing to bear in mind from what I've been reading, tariffs typically don't pass on to the consumer immediately. It can take from 1 to 3 years. So that's also an important factor to look at here. So a lot of things to consider. The buying power, now the 5-year rates did drop slightly. I'm using now 4.09%. We were at 4.29% last month for the best 5-year rate out there. If I use a 25-year amortization and do monthly calculations, our monthly cost to borrow 100 grand is $531. So that's the buying power for today's cats. You're buying $1 million home, you're going to be paying $5,310 a month. You can do that calculation in your head when you're looking at various properties, specifically for investors and home buyers that are trying to figure out their monthly payments. So that's dropping. Last month we were at $542. So significant enough to make note of. Inventory levels, what's happening west side houses, detached. Again, we're seeing that gradual increase. Not a lot, about another 40 homes came on the market last month. For attached, on the west side, townhomes and condos, we went from 840 to 900. Slight increase. We get usually significantly more listings coming on in spring. That's not the case now. That's probably a good thing because that's what's holding prices stable. We don't want that inventory to take off. Now, east side, again, not a big increase, roughly 45 to 50 homes coming on, detached on the east side, and for attached, we've got about 60 new listings. Gradual increases across the board. Remember, that east side market for attached was actually quite hot. So what's coming up for prices? Well, that's the $1 million or $1 billion question. Where are we going to be going? Let's look at what we do know. We do know that our market's impacted by mortgage rates, inventory levels, and consumer demand. And we do know that our inflation's doing quite well. We do know that we're at 3% overnight lending rate, and there's going to be another drop, maybe a 50-point drop on March 12th, and the inventory is increasing steadily, not dramatically. So those are 3 good check marks, but we do have a trade war going on. That's a red X, so that's not helping us here. So the pent-up demand, as I said, that spring market is chugging along. It's not stalling out and it's not going crazy, but it's moving forward and we're seeing good activity. And as I mentioned, we're also seeing multiple offers on many of our sales here through our brokerage at least. So that's good news. That pent-up demand is there. The variable rate could very well drop another 0.5% this month. That would be awesome. And the fixed mortgage rates, if that economy stalls out and the bond yields drop, those fixed rates might actually drop down as well. That's more good news. A lot of silver lining. And of course, as I mentioned in the last couple of months, we got the looser mortgage rules out there with the 30-year amortization. We've got the delayed capital gains. These are all good things. So I think our market's going to continue to move along through spring, through the rest of March and April, with prices holding steady. I don't think you're going to see any dramatic changes. You might see some slight softening, but more or less the same pricing going through spring. Summer will depend on a lot of other factors that we're watching in the news every night. So the US-Canada trade war, that's a big one that we're watching, and it's definitely impacting our market, and it's also impacting that consumer confidence. It's holding some of those people back from acting. But there are many, many, many that are out there still continuing to move on with their lives regardless of this going on. Okay, so that's my market update. I hope you found that informative. You can watch my video on YouTube, Instagram, and Facebook. And if you're into podcasts, of course, we have that also on YouTube, Apple Podcasts, and Spotify. And I will point out that we're all proud to be Canadian. And as I mentioned to a group of skiers from Seattle last weekend when we were up at Whistler, for my American viewers, we love you guys. You guys are our neighbors, you're our allies. We're going to get through this, we'll work together. Thanks for joining me today.